So we've been in a big downtrend most of the morning. I've been unable to really get any piece of it. Um, and so here we are coming up on lunchtime. It's almost 11 o'clock. And what I see more than anything is that we have this big trend down, but we have these big dips back the other direction. And here we've really done the same thing. We've created sort of a double top here. And it's very easy to sort of get lost in the big downtrend and say, oh, well, you know, I could just put a swing on this entire thing and see where it's going to take me. Well, a couple of problems. First is, obviously, this is going to have a tremendous risk, right? I mean, I can see it's roughly 4 points somewhere in there, maybe 5 points worth of risk. So the larger your data set, the more you're going to have these very large gaps between the CWAP and the VWAP. And that's not what we're looking for. We're really looking for those tight little loops. The other thing is, excuse me, that you can see that we've already penetrated through the volume weighted average price here. And so even though we've got sort of this perfect touch here, this really didn't come together because you wouldn't have been able to justify it at the time, which is why there wasn't a trade taken on it. And then we've got the same thing going on here where we go up and we sort of touch the VWAP. We don't really trade a bunch of volume through it, but look how big the risk is. You know, so even if you were looking at actually going short here, you've got this sort of 4.5 point risk. And so what I want you focused on is when you start looking at big swings, start thinking about what's going on, not just in the big picture over a lot of time, but also what's happening right now. Because I promise you, if you look at this from the right perspective, you're going to see that we're really not in a swing, even though there's a big downswing going on. In the short term, we're really stuck in a range. So I'm going to pull this off. And then I want to zoom in on what's going on right now. And just think to yourself, does it really look like a big downtrend? Look at it now. Right now, it's very clear that we've made a double top here. We've sort of rounded out the lows. It almost looks like, I mean, honestly, you might have to bear with me here, but I bet I could draw out an upside down head and shoulders. Let me stay in draw mode and grab a line. Right. So here's a shoulder. This is going to the neckline. Here's the head going back to the neckline with a shoulder. Right. And so really, from a chart pattern perspective, we've got an inverted head and shoulders here, and we would expect it to trade back up and through and trade higher. So that would negate our concept of the trend right away. So that's something to think about. It's the hardest part about trading the swing is always trying to anticipate as early as you can to get into a swing. And I know that's you hate looking at a move that, let's say, is 10 points across the ES and you were only able to get 4 points of it. That's not really a problem that you should be upset about. You should be happy that you got the 4 points and not put it in the perspective of, yeah, but I could have had 10. That's going to make for a really lousy long-term trading experience. So what I'd rather do is sort of look at this as an opportunity to try and figure out how to trade a swing out of a range rather than trying to turn every big move into a swing, right? So if we look at this sort of range as an individual, let's do what we've done in other lessons where we come in and grab a decision point and figure out the places where we've got to trade through in order to justify a downtrend in this case. So we would have to see volume trade through the 84 area, a cluster trade down below it before we're going to get excited about this turning into a downswing. And then we can do the same thing on the top. And I think there's really a couple of points here. I think you could easily argue that this was the first sort of point that held, and then we came back and didn't quite get back up to it. But look how much in line these are. Right, I'm going to bring this in a little bit so we don't keep jamming up the chart every time there's a new bar. So I'm going to put a profile there, and you can see, look how well that held, right? So ideally, what we're looking at is a situation where an upswing would need to come out of this area. Let's get a line on there. right? Because we've already seen that come together before, and we could even put the profile here if you prefer. And the downswing, continuation of the downswing, would have to come through somewhere right around here. So now we've got some good points of reference for where do we need to start looking. And look, we're coming down through, well, we're coming to it, I shouldn't say through it. But now we've got some good reference points for what we need to trade through and across and everything else in order to have an opportunity to put together a swing. Because if all we do is look at it from, well, here it is, let's get the swing profile on because this is a swing down, well, we're going to find that anytime that we've got the market moving back up like this, it may still technically fall between the CWAP and the VWAP, but logically, the context of the chart, this is negating a downtrend, right? We're starting to get double tops, higher lows that are coming in as we move back up. We should be more focused on the idea that this might very well be a transition higher, right? What's just happened? We made a low. We've now retested the low. What if this breaks off up to the top side and trades through the 88? I'm going to be much more excited about going long off of this than worrying about the overall swing down, right? So if we bring this across, where is our VWAP? All right, well, our VWAP's at 89. Our threshold for the range is at 88. That's where I'm focused on. I like that better than anything, right? So if we print volume across 88 and 89, we're going to negate the VWAP. We're going to break the range. I think we're going to have a great upswing here if that comes together. So I want to be focused on it from the standpoint of I'm now back in a range. I don't care about the bigger picture of what happened during the day unless there's some key points around me. I'm more focused on now how do I get into a new swing. And that swing could be up or down. Doesn't matter to me. Spread this back out and we'll see if we can get any action here. So we are challenging this low here. We haven't printed any volume below it, but just for the purpose of being ready, I'm going to go ahead and get a swing profile on from the top of the swing down. And obviously, until we start printing volume down below this, it's not really a swing. I'm just getting myself prepared because I've got work to do, right? I have to be able to look at the risk to reward. I have to be able to make sure that we've broken something and that I'm ready to go. And I don't want to be, and look, if it stops here and turns around and goes right back up to the other side, I want to go off of this low and start working to the high side. And looks like we're still holding. Notice where the volume cluster is, right at 84, right? This is why we don't want to get fixated on things being one tick either way. Okay, we just shot right back down. We're either going to get a nice transition here or a transition back up or a breakdown. Okay, look, we're starting to break down through it. Now notice, look at this. So we've penetrated the lows. This is substantial now, right? I mean, this isn't just a, it's pretty substantial, right? And notice where our entry would be. Look at the CWAP. I want to go ahead and get my order in here because
order pending.
I want you to notice where these lines are falling, right? We're maybe running away from this. So look, we have the pull back into this with our stop right behind where this transition is, right? These pieces come together very nicely. So we've got the breakdown. We've got now what we would call a breakdown or a continuation of the overall trend. And now it's time to try and capture some of that using the most recent data, right? This is the volume that's involved in this breakdown is here. It's not this, and it's not all this stuff over here. So it doesn't make any sense for us to use a 14 period look back. That would just be ridiculous. We need it to be from this point where the volume should be included. We've got a nice little stop going on here for if we can get this filled. So right now it looks like it'd be about 4 ticks. No complaints about that at all. Okay, now we got to make some decisions. Look where our entry is. Our entry is substantially lower than the breakdown, and our stop is inside of this. Now, the reason that I think this is still okay is because if you look at the breakdown, we didn't have volume here, right? The volume's all down below it, and then look what happened. This was where they tried to force it back up and back down. So let me pull this down. And so getting into a trade here against this cluster of volume makes a lot more sense than it coming back up into this sort of gap where there was no substantial trade. Here is our level of support that becomes resistance. Here is our level of support that becomes resistance. Still moving. We're going to see if we can get into this. Now we're in a new level here, right? This is another transition. This is where seller pushed down, the buyer tries to lift back up, the seller comes back in to initiate more trade. Like this as a good point to bounce off of as well. Okay, hopefully lifting into this. We're now at 2780. Again, our stop up here where this other
Order
cluster
filled.
of trade is, we're going to get that stop in nice and tight. Now we want to go ahead and get our risk to reward put together. So let's grab our little tool. We have an entry, we have a stop, and we can see where the 2 to 1 is. Now, one thing I want to note is I'm not wild about where the 2 to 1 falls in relationship to the low, the current low here. Let me adjust the other targets in case this runs, and then we'll talk about why I think that's in a bad spot. All right, so that takes care of our 2, 3, and
Target
5
filled.
to 1, and there's our 2 to 1. So I guess it's really sort of a moot point to worry about it at this point. But I'll go ahead and bring it up anyway because it's something that, as you've got a trade, and you can tell, like the whole way down, I was excited about getting into it. Like it didn't matter if it was here or if it was here. I was looking for any little pullback. So I was pretty excited about the trade, sort of no matter what. But when you get into
Target
it,
filled.
and there's our 3 to 1 target, and this is working out really well. So I'm just going to keep moving the stop. When you get into a trade like this, and you've got you don't have any clusters right at the low. One, it's usually a good sign that there's going to be a continuation because a lot of times responsive trade, you'll see clusters right at the low, and that means that buyers are coming in and absorbing inventory, and so they're really holding a hard level. So if the cluster was at 77 right at the low, it would be of more concern. That's not really the case. But what worries me is that when I get into a trade and my risk to reward, in this case, I think the initial one was like 6 ticks, and then the first target is 12 or something, and it's outside of the low, right? So a lot of times we'll come down and we'll double bottom. I mean, we see it when we make double bottoms all the time, that we don't go quite as low as we did the time before. This is a good example. Here's a low, we come back into it, and then we bounce off of it. So if you can get your trades to sort of, look at this, we're already at break even with our stop. If you can get your trades where you can get your 2 to 1 before you even have to get down anywhere near the low of a period, that's always going to be better. But obviously this has worked out fine. This was a nice continuation off of the prior move lower. So we've got a big swing down, then we consolidate sideways, and then it looks like here we are right before lunch and we're starting another breakdown. So really a nice way to put it together. How do we know that it's time to trade? When we break down through the low of that range. And now we're, no matter what, we're in the money on our runner here. That may not be much, but better than nothing. And we're coming back up to the CWAP. So we would expect that to hold again. Worst case, using the volume weighted average price as our backstop. Okay, big stop move here. You can see what we're doing is just grazing against this cluster weighted average price, which is exactly what we would expect, right? It should act as resistance, particularly when it lines up with other things. You can see the transition that took place here. We made the low, we traded up, we traded through the low. So obviously there was some sort of a breakdown here that took place getting through, and that seems to be where we're holding so far. So we'll just continue sort of moving our stop along as it goes, and hopefully we'll see a further breakdown. Okay, seeing a nice push off of the CWAP here. We've come right up against it a couple of times. And so really now we can do, just as though we were getting into a trade, we can kind of plan this out. Here's our transition off of the low. This is what has to be taken out in order for there to be a continuation. And if we can't break through this area with this 74 quarter, 74 half, this is where we would expect the market to hold on a double bottom if we're going to change direction. So we just want to keep moving our stop along. As we get a little bit more advanced with this, we can talk about why coming down off of the low, we wouldn't want to see this area taken out. So you could potentially even move your stop a little bit closer. I don't want to complicate the conversation until we get a few lessons in with anything more than being focused on what is the reason that you want to initiate a trend or a swing trade. Right? We need to be able to read this as this is a breakdown. Why is it a breakdown? Because the volume traded below the breakdown point. Once that happens, where do I start the profile from? I need to find the highest point in this swing, in this leg of the swing down, because I want to be inclusive of that particular volume. Right? That's what's important, is the volume involved in the swing, not the volume before the swing, not the last 14 periods of the swing. I want to know all of the volume included in the swing. Okay, retesting that CWAP, now starting to come back up through it. You can see all the prior volume really holding in a line, and we're starting to just jab through it a little bit. Now coming up pretty close to the volume weighted average price.
Stop filled.
And our stop gets picked up. So we end up with a trade where all of the contracts were traded for profit, so nothing coming back to eat us. We managed to get the 2-to-1 and the 3-to-1 out of the trade relatively quickly. The real trick was being patient here, because for a while it really looked like the market was running away from us. And I know that it's difficult to look at something and say, well, but I mean, golly, the trend started all the way up here and all you did was get this little bit of it. Well, that little bit of it is what makes a successful trader, right? To be able to look at a situation, weigh out the risk to reward, figure out how and when to execute the trade properly. That is the difference between a trader and somebody who is just looking for a magical system that doesn't exist, right? We're not ever going to know something is a trend until it starts trending. And so to think that there's something that's going to put you in the trade here consistently to capture all of this is ridiculous. What we need to be focused on is making sure that every trade that we are risking capital on has a justifiable risk to reward, and that it's a trade that we would take the next time. It wasn't just luck, right? The next time this scenario comes up, are we able to take the same trade?